Fearless Disease.
And to continue to build over the course of the rest of the year and into next year. And it's also possible and that there may be effects on unemployment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the
Just to keep, speed you guys up, we're looking live right now on Jerome Powell. He's talking. We're just going to listen to a little bit. I rewinded to a place that I think is very crucial. He's answering a few questions from, of course, the media. But what really happened this morning, which is kind of, I want to say alarming, is basically traders are slamming 86.9% of odds on December's Fed cut after dovish signals. So 86.9. That's depending on experts, that's good or bad. We'll let you guys in the comments decide that. Stocks are drifting to records, but Trump's tariffs loom like a storm cloud right now. So this is winding up between Bitcoin, the tariffs, and we want to see what the percentage is going to be. Right now it's at 86.9. So it depends on what your business plan is. This is crucial on what Powell is talking about this morning. Of course, it's Wednesday. Let's continue to hear what you guys say.
We'll now look at the revised job creation numbers for May, June, July, and August. I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that, but we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that warrants a change in policy.
I mean, he's right. There's always going to be up and down in the markets. The whole thing is trying to level things. The point of this discussion today, because I really wanted him to talk on, I don't know if he has already because this is live, and I didn't want to go through the complete speech by him. Of course, you guys, I'll link it in the description. You guys can, but I wanted him to really touch on the lower rates that are the flood cash. That's happening, particularly with Bitcoin and kind of like tech. The PCE, the data tomorrow could seal at least 100K BTC, which is, of course, Bitcoin. If inflation hits 2.8%, which is expected. Now, we're still looking at Bitcoin right now, still floating around that 85, 87 right now. It's going to fluctuate a lot. Right now, it's about 86. And today, again, of course, you're watching this on Wednesday. Check the upload date, you would know. But I really think that he needs to elaborate on what it's doing to the Bitcoin market, especially with these tariffs. So let's continue a little bit more, and we'll get to a few of the comments.
Once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So,
see, that was a stupid question by the reporter. Of course, our inflation was going to have something to do with immigration. They're trying to catch him into a web and trying to make him look like it has to be nothing but tariffs, because of course Trump is just the worst guy on earth right now because he did the tariffs and he's doing immigration. But they want to point it towards the tariffs instead of understanding that when you do have migration, of course millions of dollars are going to leave because we don't have illegals up here just throwing money into the market. It's going to create some type of inflation. Things are going to go up. It's going to seem like it goes up because not a lot of money is coming in, which makes sense. So it was kind of slow on the reporter to ask that question, but they have to put somebody in the bed. Like, they have to blame somebody else. When you're creating a new, a better economy, you have to go to a dip before it gets higher. There's no way around it. We have to bleed a little bit. We have to have a little bit of pressure on society, especially when it comes to money, when we're trying to rebuild something that was broken in the first place. You got to break it down so it can build back up. So we're going to hurt a little bit because of immigration. We're going to hurt a little bit over the tariffs. It just has to go. But let's get the comments for today. Just a few predictions that I think, especially with the S&P. I know you probably talked about it, but what I think is to be at least 6,000 by the end of the year. I 100%. I think it'll be 6,000. As far as Bitcoin, which I love, Bitcoin is gonna stay back to like the 85K. I think so, because right now it's holiday season. It's December. People are buying gifts. Usually it's always slow around this time. So I would say load up on it. It's in the dip right now. Buy. Like I said, it's not financial advice, but this is what I'm doing right now. These are my thoughts. That's what I'm doing for my family. You guys check on it. Keep a lookout on it. You can buy it at various places, but I would at least put some money within it. Once again, appreciate you guys always listening to me, following. I appreciate everybody. We'll see you guys tomorrow.